Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, January the 7th. I'm Eric Wilkinson, and yes, you may very well recognize me as the Wolfman from mainstream media, where I talk about economic data and how that impacts the market. I do that in these webinars as well, but I also go a little bit further and talk about how we can take options and implement them into our portfolios in regards to those assumptions we come up with the economic data and the markets. Without further ado, though, let's get on with the economic data across the pond. We got some flash estimates out of the European region for CPI, which is Consumer Price Index, that came in line with expectations. So did the core CPI, which strips out food and energy. It's a little bit more of less volatile economic data point. Retail sales is something I really wanted to talk about because we saw that those were a little bit better than expected. We're hoping to see a little bit better than expected here in the United States as well. Retail sales in Europe coming in at 1%, expected to be 0.6%, and they revised last month's number up from that negative 0.6% to a negative 0.3%. So it does look like the consumer waited a little bit longer this year to come in to the retail sector to start buying for the Christmas holiday. We also get the ISM, which is the Institute for Supply Management here in the United States, coming out. I haven't gotten that yet right now, but I'll try and get that. There we go. Comes in at 55, expected to be 54. This is the non-manufacturing PMI, which is the service sector. The United States is more of a service sector, so that is one of the more important economic data points we're going to look at for us. That coming in a little bit better than expected. Factory orders did come off by about 0.1%, and that came in at negative 0.7%, expected to be a negative 0.6%. So we'd like to see that one start to ramp up as well. So that's it for the economic data. All right, we've got crude oil coming off a little bit. Did settle below that $63 a barrel that we talked about. That was the line of delineation. That is going to be a psychological factor, maybe show us that we're a little overextended to the upside. Today's market action staying below that $63 a barrel, but you can see with this chart setup that it is actually looking almost like it wants to hold on to this area, at least for a little bit, as we're creating hangman doji here. Basically at this little move here, we are in a pattern where we are looking at the market to stay in a trend there. I'd like to see it come back off because that's going to crimp on some of the spending in the economy. So we'd like to see that roll over, but with this doji right there at that move, is looking like it's really got the bulls and the bears fighting, and looks like it wants to maybe even creep a little bit higher here in crude oil, stay in that trend channel. Gold, I was expecting also to have that really blast off top and start to roll back over. We talked about the point of control moving higher in this market, but today's market action is also, again, making this look like that as a continuation pattern. Anytime we get that doji that looks kind of like that, and then another counter-opposing doji that kind of looks like that, no matter what, it is going to make it look like the market wants to move a little bit higher. So that's kind of what we're getting. That's usually a continuation pattern to the upside. So keep that in mind, that is kind of the way it's starting to feel like. Close now towards the bottom, you know, we talked about this as well. A close towards that bottom would start to make it look like it's going to roll back over to the point of control. But right now we covered that gap that I talked about, you know, gapped higher in gold yesterday. It looks like we've covered that gap in between there. So, or at least made that attempt to cover that gap, which kind of leads one to believe that we could see continuation to the upside. That gap's covered, that's fulfilled, and the market may want to still move higher there. All right, then we've got the bonds here. Bonds, big doji at the top here, very bearish. I think that we are going to continue to try and migrate. Again, we're getting that same kind of pattern set up here in bonds as well, where it's looking like the bulls are not done here yet. Despite the fact that we did settle below that 50-day moving average, we have gotten back above that 9-day, which is short-term bullishness. And I think we're going to start to migrate a little bit higher, because I don't believe that the Fed is going to do anything. We actually had a Fed governor speaking yesterday, I think was Williams, and wasn't really talking very bullish at all on rates. So, all right, we've got the VIX moving higher. That gives you a little bit of an indication that the equities are coming off a little bit. Dow Jones is off by about 87 points, but well off the lows. They were down over 100 points. Yesterday, we did manage to settle above that 9-day moving average. As a matter of fact, we settled on the highs of the day. Right now, just below that 9-day moving average, but I don't think that we're going to see too much weakness here. It's probably more of a profit-taking aspect going on there in the Dow Jones Industrial Average. All right, NASDAQ is moving higher, up by about 16 points. Most of this is probably due to Tesla. Tesla has just been screaming higher, and 52 weeks, I think it's up, it's up almost 100% there. I think last I saw it trading was well above, or just above 400 anyway. But we've got the NASDAQ moving higher by about 14 points, and the E-mini S&P is in negative territory. So a bit of a mixed bag, more people pulling out of some of these blue chips and throwing it into the tech stocks, a little bit more risk on, if you will. So that is actually a good sign going forward. When people are putting money into tech, that usually means that they're pretty confident overall. Despite the fact that we might see some weakness in the blue chips, it's just a sector rotation really is what we're seeing there. All right, E-mini S&Ps, as you can see here, overnight it was actually pretty bullish. Coming into the day, we flushed those guys out, so the market was pretty flat on the open and trying to make a bit of a move higher right now after flushing out that overnight inventory. But E-mini S&P is still in negative territory right now, but I don't think it's a whole lot to be concerned about. I think that we're going to continue to see this move higher here as the economic data starts coming out a little bit better than what we're expecting. Keep in mind, we are starting to head into earnings season again, so that is going to be a lot of shuffling back and forth as well with these markets as people are getting ready and gearing up for earnings. So keep your eyes out for that as well. There's going to be opportunities to be had, and we'll be talking about those in these market commentaries. So keep your eye out for my market commentaries as well, all right? Because we'll talk about option strategies we can implement in and around that, all right? So if you can't take that, take it easy.